Hi guys, welcome back to another video. Today we're going to be looking at why $514,000 has been set as a price target for Bitcoin. Bitcoin is quickly growing in market capitalization. In the last year, its market capitalization has grown from a whopping $168.32 billion to nearly $650 billion, which is an increase of 286%. Although the short-term fluctuations in price have constantly flooded headlines and caused pandemonium amongst the new retail investors who have caught on to all the recent hype around cryptocurrencies, long-time investors often consider Bitcoin as an asset that is an excellent store of value and as a long-term investment. Bitcoin is termed as digital gold not only because its value comes from how much people believe in the asset, but also because it offers an upward trajectory in value over the long run. This can be attributed to its limited supply. Bitcoin, by design, only has 21 million coins in existence, and Satoshi Nakamoto, its creator, intended this in order to create an appreciating trend in price. For many reasons, Bitcoin is a great investment. I've made a separate video on why people believe in Bitcoin. Check that out in the cards above. Nevertheless, a price target of $514,000 per Bitcoin has been thrown around a lot. No, this is not a price target for the end of the year or 2 years. This is supposed to be the price target by the time all 21 million Bitcoins are mined. Currently, miners only get 6.25 Bitcoins for every block added to the blockchain. This is roughly 205,000 US dollars. You should know that the complicated algorithms that the miners have to solve to process transactions onto the public blockchain gets increasingly difficult, and the reward miners receive for processing said transactions are halved every 4 years. This also means that the coins produced halves every 4 years. Between 2009 and 2012, about 10,500,000 bitcoins were mined. Between 2012 and 2016, about 5,250,000 bitcoins were mined. Between 2016 and 2020, about 2,625,000 bitcoins were mined. As such, analysts expect that all 21 million bitcoins will only be mined by 2140. This is a long time. Knowing this, we can begin the process of valuing Bitcoin. So to discern its value, we have to compare it on two fronts: its role as a medium of exchange and its role as a store of value. To discern its value as a medium of exchange, we have to compare it to fiat money. According to an article on Investopedia, the M1 and M0 buckets of money in the economy are roughly worth $4.9 trillion. M0 refers to money being actively circulated in the economy. M1 is M0 in addition to money in demand deposit accounts. Demand deposit accounts are essentially accounts such as your checking account where you're able to withdraw or demand your money back at any given time. Since M0 and M1 are readily accessible for use in transactions, we will consider these two buckets as mediums of exchange. The M2 bucket is M1 plus savings account and small time deposits. M3 is M2 plus large time deposits and money market funds. The article from Investopedia suggests that this is valued at 45 trillion US dollars, excluding the other buckets. Since the M2 and M3 buckets are not readily used for commerce, they're considered to be a store of value. Gold is also an asset that is predominantly used as a store of value. Again, according to the same article, gold is worth $2.1 trillion. Now, adding all the stores of value up, we get a total of 47.1 trillion US dollars. If we now add that to the 4.9 trillion US dollars in the M1 and M0 buckets of money, we get a grand total of $52.1 trillion. By 2140, if Bitcoin reaches 15% of all money in the world, which some people consider a conservative estimate, Bitcoin would have a market capitalization of $10.8 trillion. If all 21 million Bitcoin were in circulation, that would put each Bitcoin at a price of 514,000 US dollars. To put that into perspective, Bitcoin is currently worth only 653 billion US dollars as of May 30th, 2021, and occupies only 1.7% of all the money in today's world. all cryptocurrencies combined currently account for less than 5% of today's money. However, there are many flaws in this model. The model is built based on the current financial climate. Inflation and other factors can heavily change the value of today's money in the world, especially considering that we're talking about a time when all 21 million Bitcoin are in circulation, which is more than 100 years in the future. Moreover, headlines have recently been flooded by the news of people losing their Bitcoins forever because they store it on offline wallets and then forget their passwords and it's encrypted forever. This means that the figure of 21 million Bitcoin that Nakamoto intended may never actually be reached. According to chain analysis of the existing 18.5 million Bitcoin that has been mined, about 20%, currently worth about $140 billion, appears to be lost or otherwise in stranded wallets. Another thing we need to consider is that Bitcoin's limit might even be changed. For a long time, people thought it's impossible to change the core infrastructure of Bitcoin. But several changes have happened. The most recent change, in fact, was a unanimous agreement. This means that a change is not completely out of the realm of possibility. To learn more about the change and the new improvements it brings to Bitcoin, check out the video in the cards above. Moreover, our valuation of gold as a store of value is flawed as we only consider gold bullion. Many people use jewelry as a store of value too. Moreover, we discarded silver from our model because current events like the government selling off silver bullion seems to suggest that silver's role as a store of value is slowly diminishing. However, it's impossible to predict the situation more than 100 years in the future. We've also not considered other gemstones which can fulfill the same role. Although this makes our model quite inaccurate, we need to understand that the exact numbers do not matter as much as people make it out to be. Many people are bullish on Bitcoin and feel $514,000 is a somewhat conservative price target. It is far more crucial to understand why people believe in Bitcoin. It may not be the perfect currency, but its prospects are far better than that of fiat money, according to many. The idea of decentralized finance isn't going anywhere anytime soon, and Bitcoin is a major player in that, and as such, we can expect an increase in valuation over the long run. Thanks for watching, and please check out the other videos I've made on cryptocurrency. They are linked in the description below.